You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it must be Friday, means it must be time to view some volatility. If so, you got the right show. It is time for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com. as well as, of course, from the ever-exciting Options Insider Radio Network. You guys know how to get us by now. The archives deep back into the dark ooze history of the show. It's theoptionsinsider.com or our app, probably the best places to get that. If you want to just subscribe, get the weekly updates as the show comes out to you, delivered to your device of choice, then go on your platform of choice, your iTunes, your TuneIns, your Stitcher. I prefer Pocket Cast, but to each their own, whatever platform you like. If you really want to get it live in your ears the instant it comes out, then join us via the Mixlr live stream, MIXLR. You guys know where to find it now. And of course, however you listen live after the fact, hit us up. Questions, comments, insights, pearls of wisdom, we do like to hear. Contrary to popular rumors, particularly from Mark, we do like to hear from you guys. And speaking of the greasy meatball, I am joined on the old Volatility Views once again by my cohort, my partner in crime, the major domo over there at Option Pit, and the man about town at Carmen Line Capital, the greasy meatball himself, Mr. Mark Sebastian. Mark, welcome back to Volatility Views. It's been a couple of weeks. I was off on hiatus last week. Well, not I was on hiatus. The show was on hiatus. I was down at the Options Industry Conference doing a lot of talking last week. So it's been a couple of weeks. Do you remember how the show goes, sir?
It's been a while, but yes, I do remember. And I'm kind of excited about today's show. It's the first show that we've done in Chicago where the temperature is above 60 degrees.
Yeah.
Go us.
Yes, there we go. We win finally. Mid-May, and we finally get some spring action here in Chicago. And you mentioned we do have a fun show in store with a great guest. You guys have been hitting us up for a while about the legion of new volatility products, the VIX alternatives that are coming onto the scene hot and heavy these days. So we thought rather than having us talk about it, which we do every week, let's go straight to the horse's mouths with one of the new ones. So it's time to open up our Volatility Viewpoint segment.
It's time to welcome thought leaders from throughout the volatility trading world. It's time for Volatility Viewpoint.
All right, everybody. Welcome to the Volatility Viewpoint. Like the man said, this is a portion of the show we welcome on guests from throughout the world of volatility. And we dive deep into their souls and see what's going on there. In this case, I am pleased to be joined by my old buddy. I was just talking to him a week ago. Old friend of the network, even though he hasn't been on this program before. He is Shelly Brown, the Executive Vice President of Strategic Planning over there at MIAX. Shelly, welcome to the Volatility Views program.
Good afternoon. Glad to be here. Thank you, Mark.
It seems like it's been so long since I've talked with you.
At least a week.
At least a week. Yes, listeners, I did a deep dive with Shelly on our interview program. You can check that out wherever you find this fine program, of course, or just get our network content. Or you can subscribe to our interview show as well. I know a lot of you like to do that. We get into all sorts of things going on at MIAX. We touched on our next topic here a little bit, but I thought this was the place to really do a deep dive into all things volatility because MIAX is getting into that game. You may remember a few years back, our friends over there at BATS came out with a product that our old buddy there, Russell Rhodes, I think, referred to as SPY 9, by the way they were treating it. It was, of course, spikes, which was the effectively trying to make a VIX alternative off of a very popular contract you guys all trade called the SPY. Of course, SIBO bought BATS. That product kind of went away, and now it is back. And it is back in a new home over there at MIAX. So, Shelly, first, A, welcome to the volatility fray, and then B, what made you guys over there at MIAX decide you wanted to relist, if you will, spikes?
Well, the inventor of the index, the folks at T3 Index in Australia, approached us after the other opportunity they had with BATS went away, and we've been looking for a similar product. We think there's room for improvement in the space. We think there's room for competition in the space. Working with the T3 group sounded like a great opportunity for us. We really like their product. We've worked together to make some minor modifications, and we're very excited about launching the product. And in fact, the index value is already being disseminated through Opera under the ticker symbol SPIKE, SPIKE.
By the way, before we go any farther, can I just say congrats, thank you on the name change. I know it's pronounced the same, but the spelling before was, shall we say, a bit much. So I'm glad you're calling it spikes and it's spelled spikes. There's no Web 3.0 kind of spelling with the Z's and the 9s and all the other stuff those guys had. So I appreciate that, Shelly, if nothing else.
Sure. We're always trying to make things simpler.
There you go. I know it's all for me at the end of the day. And really quickly, I know we touched on it before on the show when the announcement came out. A lot of people were asking us about it. But let's get into it. Obviously, you're not just taking the VIX methodology and just slapping it on SPY because that's a proprietary thing. You can't really do that. So walk our listeners. I mean, our listeners like to get into the nitty-gritty on this stuff. Walk them through exactly what you guys are doing to create this spikes in terms of how you're applying it to SPY and maybe some of the nuances and differences that they're seeing with the VIX methodology.
Certainly. The spike index is using a variance swap calculation similar to other volatility products. The differences are really how we're picking our inputs. We have a proprietary methodology we call price dragging for choosing the individual input prices for each option into the model. That price dragging is based on the last trade price as opposed to some other products that use the midpoint of the bid-ask. The only time we wouldn't use the last trade price is if the NBBO bid and SPY option is higher than the last price, we would use the bid. If the ask price is lower than the last trade price, we'd use the offer. But that price dragging really adds a smoothness to the calculation. We saw some major divergences between spikes and some other products on February 5th during the large sell-off, the 1,000-point move down. I believe by using the midpoint of the bid-ask, you're subject to market changes based just on widening of bid-ask spreads as opposed to actual trade prices. So we believe the price dragging gives a far more continuous value to the index. We're using SPY options as the underlying inputs as opposed to SPX. SPX, of course, is a proprietary product. SPY is traded in all 15 options exchanges. We use the NBBO, so the best trade from any exchange at any given moment in time. SPY trades in pennies as opposed to nickels and dimes in SPX. So you have generally narrow spreads. It's multi-listed. The other thing we're going to be doing different than the competitors, we're going to be calculating. In fact, the dissemination today is calculated in 100 millisecond increments. So it's far more granular. Another big difference is in the way we truncate or choose the ends of the tails used in the calculation. We're going to use a truncation based on the option price, when there's two contiguous options with an option price of 5 cents or less, we stop at that second option. The other index is based on the first two zero-bid options. So it's a little different view of how to truncate.
You know, that price dragging thing really stuck out to me because I know you mentioned before the midpoint and some of the issues around that, particularly in times of, shall we say, extreme duress in the marketplace. That midpoint calculation suddenly becomes a little bit more difficult. These things widen out 50, 100 handles wide in these spreads. And so getting a midpoint there can sometimes lead you to some prices that shall we say a little bit wonky. Was that the impetus behind trying to take this price dragging methodology to try to navigate these a little bit more exacerbated times in the market, or was there some other reasoning behind that?
It's really just the continuity of value. Value certainly can be perceived as a midpoint of the bid-ask, but that can be very skewed at times. So, for example, take a series of options that are worth less than $2.50. In a wide market situation, if everything went $5 wide, they'd all have a midpoint of $2.50. But in reality, they'd be trading where people really willing to buy and sell, as opposed to indicative markets. The other issue that we think exists with the other product is, one, it being single list. Two, the markets are much wider than the comparable markets in SPY. And even accounting for the 10x difference in the value of the index, for example, if you compare the 270 30-day straddle in SPY to the 2700 30-day straddle in SPX, the SPX, even adjusted 10-to-1, tends to be anywhere from 3 to 5 times wider.
So, I'm listening to kind of what you're discussing in terms of how it's calculated. The one thing that strikes me is, do you think that because of your methodology, you could see some stronger volatility in the index? Because what I'm thinking is when vol is really going up and demand for puts is going up, and everybody's buying, and it keeps running through the ask side as it's dropping, that you could see, as opposed to the midpoint, you could actually see the ask price, the kind of moves be exasperated on both the spikes and on the drops when nobody wants to own premium. Have you kind of looked historically at kind of what the vol of this index is?
I can't right now answer the vol. I don't have that handy, but I will tell you that we see that the spike oftentimes is leading the VIX, especially on micro moves. And when you have a situation that markets widen and there are no orders grabbing those offers, it's a more contiguous pricing. But at the same time, when you have situations where people are reaching for those out of the money puts, we find that the spike actually leads the other index oftentimes, especially in violent down moves. Historically, the R squared is about 98 between the two indexes, 97, 98. So they track very closely in normal times. Sometimes VIX or the spike is a little higher than the VIX, sometimes a little lower. Some of that is related to the fact that the SPY is an American style as opposed to the European style in SPX. Also, the dividend has a small effect on the SPY, but it does look like it tends to lead, especially micro moves in the cash indexes.
And Shelly, this is obviously an interesting time to be launching an alternative in the volatility space. Like I mentioned, there are a lot of people who seem to be eyeing this space all of a sudden. Probably not a lot of it, or no small amount of it, I should say, really due to the fact that there are some issues floating around out there in the popular media about VIX and the way it's been settled, and some concerns floating around out there. And now we have, the SEC and CFTC investigations going on there. And a lot of people, even though we've addressed it many times on this show, and the settlement is a very small part of the entire VIX lifespan, it still is getting a lot of headlines. So I'm curious for you guys who are jumping into this fray anew, is that concerning for you? Do you think that those fears will spill over to you guys, even though you guys are clearly using a different methodology? Or B, do you view it as an opportunity? This is your chance to get in there now while other things are afoot with the main product.
So it's both a risk and an opportunity. We've certainly had extensive calls and discussions with the commission on the product and talking about what differences there may be in the settlement. And I have to laugh, Mark, when you say the settlement's such a small piece. It's really the ultimate piece. From a point in time, it's a small piece, but it's the ultimate problem to solve. Chris Kincannon sent a letter out a couple of weeks ago explaining their perspective on the discussion over the settlement. We agree 100% with everything Chris said in his letter. And I give the SIBO credit for being open about trying to solve the problem. But Chris also talked about how making the market more electronic, making the opening auction more transparent and more automated will help in the future. We agree with those statements as well, but we're coming out of the box with that. Given the MIAX speed, the MIAX liquidity, and the MIAX transparency, we believe it's going to be a better opening auction. It's transparent for all, not just members. Anyone can get our depth of market feed, our book feed, the index feed, and the imbalance feed. It's available to anyone who wants to subscribe to it. Anyone can enter orders to any exchange member. There's no restrictions to who can reply to the auctions. We plan to be far more transparent during and at the end of the auction, showing what the price was used for each option as an input to the model, when that price was selected, what price was being used in the cash index. We believe that the variance that one sees during the opening in the settlement will be smoothed out a lot by the fact that Spike is based on SPY. SPY is multi-listed across the 15 exchanges. The options are much tighter on a bid-ask spread basis. And if there happens to be a large imbalance, using the example that SIBO used, where there was a large buyer of the basket of options at the opening, those imbalance messages will go out to the world, and this product is traded to multiple exchanges. And those market makers that are trading the other exchanges, if they see an opportunity to arb between the exchanges, they will bring that back into line very quickly, as opposed to a single list product that there's no direct arb for. So we think the settlement will be much smoother and much more correlated to the cash.
So just to clarify, because I know 8 million people after the show goes out and listening live now are probably going to hit me up and ask this specific question. So let's just get it on the record now. You mentioned it. You just referred to it, kind of the order imbalances. People call it the carpet bombing. All these things go on where these effectively worthless out-of-the-money options trade around VIX settlement time, and it seems to have perhaps undue influence, as some people have claimed, on the settlement itself. By the way, the reason I say the settlement is a small part is because obviously it's easily avoidable for any savvy person out there. But that's a conversation for another day. We don't need to get into that now. But I want to just clarify for what you're saying here, Shelly, that you feel with your methodology and the way you guys have constructed this and the folks at T3, that your product spikes will not be susceptible to the same sort of quote-unquote manipulation that people have been alleging out there in VIX these days.
Well, that's correct. So let's just say you took a far out of the money option that was worth a penny or less, and somebody came in and wanted to buy X thousand, and they were willing to pay 5 or 10 cents, perhaps trying to manipulate the index, perhaps doing a legitimate basket, most likely doing a legitimate basket. But be that as it may, if those options are offered on away exchanges in size at a penny, the ARBs are going to come in and offer them here at 2 cents, hoping to buy them back away at a penny. At worst case, that option won't even be included in our calculation because we truncate at the first two options at a reference price of 5 cents, 5 cents or less. So we won't even get to those options. They could try to buy thousands or tens of thousands of options at 1, 2, 3 cents that are offered away at a penny. Even if they trade at 1, 2, or 3 cents, they won't even be included in the calculation. So we think it's far more insulated from that sort of manipulation relative to the other product.
And what sort, you mentioned products, what sort of products can we hope to see? Obviously, this is all pending SEC approval. So maybe first off, tell us that. What is your time frame for when you think these products will roll out? And then B, what sort of products are we talking about? Are we talking about options? Are we talking about a tradable underlying as well, which has always been the issue with VIX? It's just a cash. It's not really tradable. What kind of products are we looking at here with spikes?
Well, initially, the launch at MIAX will be a monthly spike product that settles based on the 30-day SPY options, so very similar to the initial VIX product. Ultimately, we like to add weeklies, maybe long-term options. The focus is just on spike and the SPY at this point. Certainly, if and when the product is successful, we expect it will be, we can look at listing similar indexes on other products. We certainly are planning to have a futures product listed. We're still determining where that product will trade. but a future on the index, we believe, is vital to the success of the options.
Oh, so you're planning a future, not an ETF or something like that. A future, interesting.
We're planning a future. Certainly, we're talking to ETP issuers about potential listing of products. There's kind of a cat and mouse here. They want to see the product be successful before they list something. And, of course, we'd like to see something listed early on. So we'll see how that plays out. One of the things that we do want to be careful of is we don't want to get into a situation similar to what happened with VIX with the leveraged inverse ETFs. We will be very conservative on that front before we'd allow something like that to go, but to the extent that we can control that. But our focus as an exchange is primarily on bringing up the options, bringing up the options in the 30-day vol and bringing up a future, whether it be on an exchange we may open or on a third-party exchange.
So that's interesting. So you're telling me then there's going to be maybe a MIAX futures exchange sometime in the near future?
If we have to, we may go down that path.
Interesting. Or I guess you could partner with some others out there, but it's enough. You already have 3 exchanges coming soon, Shelly. Why not 4, right?
So why not?
So what do we need more exchanges? But what about running a similar methodology on like ES futures options? Then you could work with the CME and and carpet bomb go after their neighbors across the street.
Well, that's a conversation we have to have with CME, obviously.
Hey, I'll get Duffy on the phone, and we'll just hash it out right here on VolViews, right? Let's do it.
Sure. Get it done. And what piece of the action are you looking for?
The CME show's coming up in about an hour, so maybe we'll bring him on that show instead, and then we'll have that one done.
We think the opportunity here is enormous, and whether it be done with one of the major existing futures exchanges or we do it ourselves, we know that we want to have a future listed. I know the market is looking for a future to be listed as well as the options, and we're working in that process. And yes, I agree, Mark. We could use this methodology on any product that has options traded on it. And there are plans to look at other asset classes, but let's start with the one that seems to be in the space that's been most successful.
And Shelly, what are we talking about for time frame here? When can we expect to get our hands on some Spikes options?
Well, we're hoping for third quarter of this year. Of course, it's pending SEC approval. As I said, we're in deep discussions with the commission. That's really the gating factor. And then, of course, where is the future going to trade? So those are the 2 open-ended pieces. As far as our ability to be ready, we're already making changes to our trading system to support single-list products. One of the things MIAX and Pearl are both well known for is not just our speed and determinism, but also our extensive risk protections. A lot of those risk protections are based on NBBO price, so a lot of those have to be modified for single list. We take risk protections, protecting the customer orders, protecting price, protecting the running of the book. We take those things very, very seriously. Those, again, are all under development right now. And we expect that software to be operational in production by I'd say, late this quarter, very early next quarter.
And obviously, you guys have been going around doing the rounds before you announced this, feeling out the marketplace for if they're receptive to this, if prop firms want to trade it, if brokers want to list it, if customers actually want to use it. What has been the response so far, A? And B, has that response changed at all in the last month or so? Are they more or less receptive, given the results of what's been going on in the volatility space?
Well, the response all along has been extremely positive. One, the marketplace would like to see a competitor. Right now, there's just one. If you want to trade vol, there's one place to go. And they'd like to see competition in the space. The market makers in general love their trading experience here in MIAX and MIAX Pearl. Again, it's all about the speed, determinism, and the risk protections. And they're excited about having this product here. They're also excited about the ability to hedge and SPY. Again, it's far tighter markets. They can get their hedge off easier. They're excited about some of the other features that we have that differ from our friends at CBOE. They prefer not to have orders drop manual into the pit at any time. They want options to be electronic. They want complex to be fully electronic. We offer those sorts of things already. With competition, they expect competitive pricing. They expect competitive service. All in all, it's been very positive comments from market participants. Certainly, since the volatility we've experienced over the last couple of months, there's some concern about some of the secondary products. We talked a little bit already about the leveraged inverse ETFs, and those were very toxic during the sell-off. But the concept of having another product out there is very positive. The other thing we heard from several of the members, which has been really interesting, is the timing of the cash. The fact that the cash is virtually real time as we're already disseminating it. Basically, calculation currently is being done and disseminated once every 100 milliseconds. It's actually been a very good tool already in the first couple of weeks for some firms. Since the VIX is calculated and published once every 15 seconds, VIX is following spikes. Spikes is showing turns in the marketplace. Plus, those turns in the marketplace oftentimes show up faster in SPY than they do in SPX because of the entire electronic nature of SPY. SPX is wider markets driven a lot by what's happening in the pit, where SPY is almost 100% electronic across the 15 exchanges.
Well, Shelly, I will say this here. We ran a poll, as we always do, on our Twitter every week. And this week, we knew you were coming on, and a lot of people were talking about volatility space. So we put it out to our audience. We asked you guys, volatility. There's a lot of volatility in the volatility space these days, with a lot of new products and some old ones coming back to life, trying to elbow their ways into the VIX spotlight. So we asked our audience, which ones do they think has the best chance of hitting it big with traders? We gave them 4 choices. We asked for, the Real Vol, which is pretty much the realized volatility S&P. We have the Voldex, which is perhaps the forthcoming NASDAQ product. Used to be at ISE. Kind of got tabled for a little while. Now it seems like it may have a new lease on life. We asked them, of course, about Spikes, which is, of course, you guys, a.k.a. the SPY VIX, for lack of a better terminology, even though there obviously are differences. Or we gave them none. There is only one VIX. And you guys were doing really well, Shelly, until about 12 hours ago when I noticed that I think Scott Nations and his crew over there at NASDAQ discovered the poll, and they've been gaming it a little bit now. They've been driving votes because all of a sudden, Shelly, Voldex is running away with it at 43%. So I know what you got to do, Shelly. As soon as you get off, you got to get on over to our Twitter, drive all your people there, and drive Spikes back up, because Spikes was doing really well, and then this Voldex folks are stealing your thunder there. So after the show, Shelly.
This is kind of the Twitter equivalent of what happened with VIX settlement last month.
Yes, a little bit of shall we say, manipulation.
Well, our friends at NASDAQ are welcome to game the polls. They're welcome to win the polls. As we've seen some other elections in the last year or two, the polls aren't always right. And we believe in competing based on actual performance. And based on that, we think we have the best product.
Well, there you go. Unlike those, though, we welcome manipulation in our polls. Go for it. Have fun. It's Chicago style. Vote early, vote often. So whatever they want to do out there is fair game. If they want to drive their people to it, have at it. But that said, there are some hints that product has a new lease on life. I was asking the NASDAQ folks about that recently. So a lot of interesting stuff. The VIX space, suddenly the volatility space, hot, alive again with new competitors. Well, Shelly, I'm glad you can get you on to hear from the horse's mouth, if you will, about what's actually going on with Spikes, when it's coming out, all that other good stuff. Sounds like you guys have a lot of irons in the fire. So I'm looking forward to how all of these play out. That said, if you want to leave us with a little bit of a hint, a little bit of a tease of maybe what we can look forward to, maybe in addition to Spikes coming out of out of MIAX. Now is the time, sir. Have at it.
Well, aside from Spike, as you mentioned, we're working on a third exchange, the Emerald Exchange. I know it's been somewhat controversial in the marketplace. Why do we need a 16th exchange? We believe we can compete in a space we don't currently compete in. It's that pro rata allocation model like we have at MIAX, with a maker-taker pricing model like we have in Pearl. There are 4 other exchanges out there with that model, 3 of them actually under one exchange family. And they have a decent slice of the marketplace. They've taken some volume from us. Some of our members have asked us for this model, And again, given our systems, our speed, our determinism, our risk protections, our customer service, that we can add value in that new market model.
Well, Shelly, I'm glad we can get you on, and I'm glad we could talk about this product, because a lot of people have been asking us about it, and so we'll look forward to hopefully seeing it get listed and out there and be able to sink our teeth into it later this year.
Well, we're excited about that as well. I look forward to coming back on the show once the product's live, or even before if your customers have questions. But once the product's live, and we can talk about how great it's doing.
We look forward to that as well.
There you go, Shelly. We're looking forward to that. Thanks for joining us. And now, listeners, we're going to keep on rolling right on into our next segment. It is time for the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, welcome to the Volatility Review. Before we get into that, Mark, kind of a fascinating discussion, wasn't it? I mean, I like talking about there's a whole variety of products out there, and a lot of people are trying different approaches to volatility, so it's kind of fun to talk about some of those. People certainly have been asking us about this one for quite a while, so I'm glad we got a chance to discuss it. Did that answer some of your questions, Mr. Meatball?
It was fascinating. I'll tell you that much.
Yeah, it certainly is interesting to see new entrants to the space and kind of what they're bringing to the table. And it definitely seems like a lot of people are licking their chops to get at that space. I did talk to the NASDAQ folks, and, we've been asked off and on for years, since we had Scott Nations on years ago, about what's going on with that VOLDEX product. Kind of seemed like it was languishing after ISE got acquired by NASDAQ, and those guys are not idiots. They realize there might be an opportunity to get into that space now, and so because that product, if you are indeed concerned about all these issues that have been floating around out there, VOLDEX is essentially VIX without the skew. So if that's your concern, there you go. I personally think the skew adds some value, but clearly it causes some issues as well. So if you're one of those people who has that tinfoil hat on, maybe that's the place you want to head out. But looking at here, what's been going on this week and indeed today in the old marketplace, kind of a gentle, an easing, a quiet end to the week here. Most of the major indices pretty much unched. VIX taking a break after coming off hard throughout most of the week. Right now, right around 1320 or so, is heading into the latter half of the show. Markets seem to be kind of shrugging off this news of perhaps broadening tensions over there in the Middle East and other issues. They're kind of just taking a gentle hiatus. Earnings have been relatively good for the most part. Some a mixed bag, but for the most part pretty good. But overall, hasn't seemed to really conspire to crush us any more than we have right now in terms of the end of the week. So after a big VIX drubbing throughout the week, most people were surprised to see it in the mid-teens. Now again, VIX Cash down in the 13 handle. They really took the wind out of the futures yesterday as well, kind of settling out as well. VVIX hovering around that low 90s level again. It was 93 coming in. It's still about 93 right now coming in out there. And let's pull up the futures. Actually, while I'm doing that, Mr. Meatball, why don't you regale us with what's been catching your eye here in the vol? It's been 2 weeks, so a lot of vol has come off. What's been catching your eye in the vol space, sir? Uh-oh, are you pulling an Andrew? Are you muting yourself on me?
No, I'm here. Sorry about that. What's happening?
What I said, what is catching your eye in the volatility space, sir?
They absolutely torched vol this week. Totally changed regimes. We've got the lowest volatility since November. The VVIX is getting slammed. Appetite for risk protective assets are gone right now. So, I'm looking at, a market that appears to be cycled out of a lot of the panic that we saw. That's what I think.
Speaking of appetite, what are you eating? It sounds delicious.
I'm having a Jolly Rancher.
Oh, yes. Because that's conducive to excellent radio, sir. Good Jolly Ranchers. Send me one next time you're here in the studio. But looking at the futures, you're right. They took a drubbing, particularly yesterday. They took a drubbing throughout the week, but yesterday they came at them pretty hard. Today, kind of settling out. I mentioned the cash around 13.15, 13.20. The futures are front future less than a handle away from that, about 8/10 shall we say, of a handle away, and we're seeing about a point more for 2 months out, so about 1.8 handles. So there's your spread out there in the old futures. In terms of what we're seeing out there in the mothership of VIX options, it's been a relatively quiet week, and we're seeing that reflected in the ADV. It was hovering around 1,900,000 some odd thousand for the lion's share of the last few months, ever since February 5th, really knocked it into the stratosphere. Now it's coming off a bit again. The ADV back down to a probably more normal 671. This is usually where it is, somewhere in the 600,000s, without the aberration that was February and all the craziness going on there as well. In terms of throughout the week, yesterday was actually the highlight of the week from a VIX options perspective, about 908,000 contracts on the tape. Today, a relatively light, 437,000, but with still some time to go. So some things could heat it up before the end of the session. We could push that ADV, get beyond it. Wednesday, 520K hitting the tape. Tuesday, 607,000. Monday, the comparatively anemic 391,000. The call to put in VIX land is pretty much about exactly where it was when we left off 2 weeks ago, right about 2.6 to 1 out there right now. So interesting stuff there in VIX land. In terms of what's been lighting it up, the hot VIX strikes out there, the top VIX open positions, the top 10 out there in VIX land. Number one with a bullet is the old 20 strike. People love their old 20 strike. 225,000 open there. The 15 puts coming in number two. The first put on our list, 198,000 there. Hot on his heels, 197,000 of the May 20s, number three. Number four, the May 17 puts, the second and last put on our list, doing 181,000 contracts there. Number five, the May 37 halves, the ever optimistic May 37 halves. We talked about some spreads a few weeks ago that involved strikes like that. So that strike still open, 177,000 open there. Number six, the May 25s, $1.53 open on that strike. Number seven, the June 30s, the quite optimistic June 30s, 146,000 contracts. Number eight, the June 25s, 138,000. Number nine, the June 27s, $1.35 open there. And rounding out the top 10, the July 30s. Everybody loves that 30 strike as well. 133,000 open there. I believe, yes, that is our first and only July on the list as well. 8.3 million contracts open, about 6 million on the calls, and about 2.3 million on the puts. Mr. Meatball, I know some interesting spreads and some trades have been going up out there in VIX land since you and I have been talking, and since in between you and I have been talking. Anything interesting catching your eye out there in VIX options land these days, sir?
Well, we saw a lot of, there was a pretty big May put spread that went up earlier in the week. They did the 15, 14, 13 put fly. We've seen a lot of kind of call selling, strangle selling, and customer put up a huge cash spread earlier. They did, they basically sold, net bought June, sold a ton of July, and then net bought August. Kind of a weird trade. They ended up bought call it 10,000 upside in June, sold 30,000 upside in July, 50,000 upside in July, and then bought another 15,000 upside in August. So kind of somebody gaming kind of how they want, where they think settle will go, or where they think, upside could potentially go and when. Also saw some nice strangle sales today. This was kind of a nice one. Customer sold the June 15-20 strangle tied up at 2.25. So basically guessing that it'll stay kind of above 13 and below 18-ish because it was tied, so it didn't have nearly as much delta. But kind of interesting trade. And then this is a fun one. We had a customer buy. This is probably for margin purposes. It has to be. They bought the 24.80, the July 2,480, 2,470 put spread. They bought it for 75 cents, 25,000 times. Got to be a margin trade, right?
I don't see much other uses for that spread outside of that. I do like the strangle selling, though. That's kind of interesting. We talked about this before. Some of these more esoteric trades are starting to find their way back into VIX. For a while there, it was kind of quiet land. I mean, they were doing paper, but it was nothing really too outlandish. It was for a long time, it was just selling the VIX any way you could. The 1x2 was dead, short 1x2. Be interesting to see if that starts coming back to life now that we're down at these levels again. The short strangle is kind of interesting. We saw a few of these lighten up. We saw some other spreads similar to this on the last few shows. So it does seem like there is a crowd out there that is not at all reluctant to blast away on some strangle premium out there. I got a feeling I know how you would do this, but on the Carmen line, I'm guessing you probably wouldn't do naked strangles. Maybe would you do like a condor to spread it off if you were so inclined, or would you go the naked strangle route in VIX?
I'm not sure that I would be a huge VIX strangle seller. I think that, we're more likely to see like a VIX of 12 or 11 or a VIX of 20 than we are to stay around in between 13 and 15, even between now and June. You look at the way VIX is acting. The floor is so dead right now. There's no demand for premium. Now the VIX futures have been kind of slapped around so hard that I wouldn't be surprised if we got a little bit of a kick. We're also going into VIX expiration, which could add some funness. Where it feels like the April craziness was just yesterday, and here we are. We're already almost to regular May settle. So there's craziness abounds, is what I would say. Craziness abounds.
Mark, it is May, and stop me if you've heard this, but some people have alleged. I would never say such a thing, but some people out there have alleged. It's a very fringe theory out there, but some have alleged that you should perhaps sell in May and go away. Have you ever heard that?
Yeah. Is there a more cliche term? I'm trying to think. I think that might be more cliche than buy low, sell high. At least buy low, sell high is kind of funny. That is not even punny. It's just stupid.
Here I am. I'm my own worst enemy because I've banned that phrase from this network for years, and here I am invoking it again. So
I know.
I'm to blame. Send your angry emails to me here, listeners, as we keep on rolling. We got some other stuff. I think I want to get to some listeners as well here. Really quickly, we'll hit some earnings vol out there. We'll save Goldman's thoughts on retail and their impact on volatility for next show, I think. But yeah, earnings are popping off. One of your favorites out there, NVIDIA. They were pricing in some juice. They were reporting after the bell last night. Let's see, where did they close? They closed right around 260, pretty much even. And they were pricing in about $17. They had a nice little spin in the after hours, I think about an 8 handle or so range, about 4 to the upside, about 4 to the downside. Still nowhere near the $17 that they were pricing in. Coming in today, they opened up about 252, so off about $8. And that's pretty much, they got a little bit lower. They got off about 2 handles. So they were off about $10 total. So a little bit of a move. And again, if you were scalping in the after hours with underlying, you could have made some of that straddle back. As we're looking right now, 256 and about a half or so out there in NVIDIA land. So only off about $4, not even. So this one, after being a rocker and roller for quite some time, coming out of earnings with a bit of a whimper. So premium sellers out there getting the better of it, at least for this one so far. Again, a few hours left in the session. Anything could happen. Out there in crude land, crude's been running amok, at least to the upside of late. Again, if you like crude, stay tuned for TWIFO. In a little bit, we'll get into all of that fun. But, of course, WTI breaking over 70 recently. Of course, all that means there was some vol in the space, but it's coming off again now. We're at about 25.5 or so out there in OIV, which is, of course, the VIX of WTI. If you know that product, you know that's high compared to recent levels, but of course, historically going back a few years, this was well below the floor of where we saw the vol out there. So things have been kind of quiet out there of late. GVZ, the gold vol, right around 11.5 as well. Both of those levels, pretty much 26 and about 11.5, pretty much unched from where we were 2 weeks ago before I went on down to the conference. So from a vol perspective in the commodities, a whole lot of nothing, even though other things have happened in between. There's been a lot of price action out there as well, which is kind of fascinating. We'll save the crypto for TWIFO as well, so stay tuned for that if you crypto heads as we keep on rolling. It's time to answer some of your questions. It is time to open up the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail, the portion where you guys get to hit us up. Questions, comments, insights, maybe some good Vol-related jokes, whatever you got, hit us up. If they're good, we'll read them on the air. Like this one, James Emmett has got a timely question, so he gets bumped to the top here. He wants to know, appropriately enough, given our guest today, what's our take on the new Spikes volatility product? I thought it was interesting, Mark. We kind of talked about it a little bit earlier. I did not know they were going for the future, which is interesting. And that alone, as we know from our friends over there at VolX and their issues trying to get a Vol future listed, that's not a small undertaking. I didn't realize they were going that way. So that makes me think that we won't see this thing for a while. Probably not, maybe not even. They want Q3, but maybe not, maybe even longer if they need to get a futures listed and all the other stuff. I didn't realize they were going that route. So that makes me think it might be a little bit longer, but I've said many times, I think there's room for other players in the volatility space. Clearly, there's an appetite for other methodologies out there. Whether this is the one or not, I don't know. I gotta wait and see. I mean, on paper, the notion of putting a volatility product on a super liquid product like SPY makes a lot of sense. But on the flip side, we've seen a lot of stuff in the vol space, including from SIBO, things that made a lot of sense, like a gold VIX and an oil VIX, and no one touched those. So I don't know. I'm kind of leery of picking winners in the vol space these days, because this space is notoriously fickle. That said, what's your take, sir, on the new, as James wants to know, on the new Spikes product?
You know, it sounds like they've got some ideas. I think they've got a tough slug ahead of them, and you know, I think they're going to end up getting sued. I hope not, but I think God bless them if they can, and because I think the more competition, the better. But they got a tough slug, and I'll be watching closely to see what happens. But you know, let's not forget what happened with the big SPY when a group tried to launch the super SPY. They also had they got taken to court.
Yeah, that of course was Box. So they had a lot of issues. That product theoretically was very interesting. They also didn't get any buy-in from the industry. The industry as a whole said, we're not going to support a product, and brokers as well, we're not going to support a product that effectively cannibalizes our most popular option right now and makes people instead of doing 10 SPY contracts, you do one. That decimates our business. So maybe not surprisingly, even though I was a little disenchanted by the industry response, I thought that product had some ideas behind it that were interesting. But yeah, the industry said, yeah, no thanks to a product that cannibalizes our volume like that. So this one doesn't have that. It could potentially be additive. So maybe that's a plus in its favor. I will say too, the headwinds seem to be blowing towards some sort of VIX alternative out there, volatility alternative out there. So if that's the case, I mean, you could argue this is one of the more favorable environments to launch one of these products, or you could maybe argue the opposite. I can see arguments for both, that the regulators are cracking down on this space, and maybe they'll be more leery to approve a new one. So there's a little bit of argument for both. I think maybe from a customer demand perspective, there certainly is interest in other products in this space. So maybe this is perhaps fertile ground if they can get all those I's dotted and T's crossed. Let's see. We got time let's do one more quick one. Here's a quick one. Probably easy one. We get this every now and then. Mr. Meatball. This time it's from Union J. He wants to know, will we ever have a VIX product that we can actually buy and sell? So he wants what a lot of people want, quite frankly. They want to be able to buy and sell the VIX Cash. Enlighten our friend here, Mr. Union J, why we probably won't see that in our lifetime, sir. Mr. Meatball, did you choke on your Jolly Rancher again?
No, I did not. I'm sorry.
He wants to know, will we ever be able to trade the VIX Cash effectively?
Oh, you know, I don't know how you would. There's a lot of smart people that have tried to come up with ways of doing it. There just isn't. The closest you can get is, you know, some sort of delta neutral straddle type thing, one way or the other, or a variance swap, but none of those are really easy.
No,
So,
we've seen. Look at the leaps that those guys had to go through to create effectively what was the VIX up, VIX down with the distributions.
it's insane.
If you want to see,
insane.
you want to see how hard it is
no way to do it.
You want to see how hard it is to do, and you could argue whether they succeeded or not. Just look at the prospectus for those products, and it will. If you want some good nighttime reading, if that doesn't put you to sleep, I don't know what will. So that just shows you the ridiculous lengths you have to do to try to approximate it, because there's going to be imbalanced demand for one versus the other. Of course, there is time value to this product. At the end of the day, I remember we used to have this argument with Jared Woodard all the time. He used to be on the show about the time value of money, and he argues that this is an appropriate thing and there should be no tradable VIX cash. So all sorts of fun things that go into it. The volatility itself has some value. So long answer, or short answer, I should say, to this question is probably not. It's just it's a difficult nut to crack. All right, let's keep it difficult nuts to crack. Probably the hardest of them all is picking VIX. Yet we do it every week. So let's try it again with our crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody. Welcome to the crystal ball. This is, of course, where we pick where VIX is going to be this time next week, right at the end of the show here, right around 1 p.m. Central. And we did this last time 2 weeks ago, Mr. Meatball. I forgot if it was you or Andrew. But I think we picked, because we were thinking about having a show. It just didn't work out at the conference. I think we picked a week ago. So in which case, our prognostications are 1 week 1 week delayed. I was around 16, which I think was actually a pretty good pick. You were around 14 and a quarter. The guest was actually at 15 and a quarter. I think we were actually in that range around 15 to 16. I'll have to look up where we were last Friday. But all that's moot because we're not on last Friday. We're on this week. So the slate is wiped clean. I'm feeling charitable. I'm feeling like a nice guy today, Mr. Meatball. I usually like to go first. I will instead allow that courtesy to be extended to you, sir. What are you feeling for this time next week from a VIX perspective?
I think we're going to have a 12 handle. 12.75.
12.75. I like that. I would not look down my nose at that by any means, sir. That would not be a bad one at all. I'm kind of wondering whether all this Middle East nonsense and noise will play in a little bit more than it has. So I'm kind of wondering. I can see us dipping down there. I don't know if by this time next Friday if we'll stay there, if we'll be there. We might be a little bit higher. So I'm going to say a little bit higher, but I'm not feeling a lot of vol here. So I'm going to say a little bit higher. I'm going to say 13. I'm going to say 13 double, 13.55 for where we are this time next week. Not a heck of a lot higher, but a wee bit higher indeed. All right, everybody. That music means, unfortunately, we've come to the end of another fun world and another fun take, I should say, through the world of volatility. Had a great guest joining us. Got to thank Shelly over there from MIAX for coming on and talking about what they've got cooking in the volatility space. I know you guys are really interested in all the myriad products and things going on in the space, so we try to bring it to you whenever possible, trying to get some more vol viewpoints rotated onto the show, get some guests on here again. It's always fun to pick people's brains about volatility and products and research and trading and all that fun stuff. So stay tuned for a lot of that. Of course, some interesting activity going on in the world of VIX itself, which we broke down here on the show as well. But before we go, Mr. Meatball, I heard a rumor that you guys had a VXX Made Easy webinar last night. How did that go? And if listeners are intrigued, maybe they want to check out the recording or want to get some of your next VXX stuff, where should they go? What should they do?
Yeah, the recording is available, and we have another one coming up on Tuesday at 9 Eastern time. If you're not a subscriber to our weekly email, then you might not know where it is, but feel free to email me, marketoptionpit.com, if you want to join.
There you go. Hit the man up, marketoptionpit.com, or of course you head on over to optionpit.com for yourself. Click on the Vol newsletter. Of course, if you want to get the webinars, that's a different section. So let Mark guide you through that. And you too can make VXX easy. Just buy the Jan 10 puts like everyone else does on the planet. There you go. That's all you got to do. Made easy. 2 seconds. All right. That's going to do it for this episode of Volatility Views. On behalf of Shelly, our guest, and Mr. Meatball, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing. And of course, for sending in such great questions. We'll get to more next week, I assure you. and we'll see you next time for more Volatility Views. By the way, if you're listening and you like yourself some commodity vol, stay tuned. Twyfo will be on in about half an hour.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.